morning, everyone. Good morning, traders. Good morning, YouTube. Hope everyone is doing well today. We got some news that happened here pre-market. There's a few things that I do want to talk about. We got some earnings this morning. We have earnings tomorrow and Thursday on big tech that are going to be of pretty big concern, I would say, as we get into the Fed. Today is the last day before the Fed. Tomorrow's the Fed naturally. And let's see what we got. So first, I do want to talk about, we had the U.S. Unemployment costs, right? The actual figure 1.0%. The forecast was 1.1. The previous was 1.2%. So that drop is pretty bullish for the market realistically. We saw a pretty strong pop in the S&P 500 from that area. We're going to talk naturally levels about S&P, the ES futures, but we've rallied pretty well above some key areas that we're going to talk about today. And that news pop brought us from about 26 all the way up to about 46. So a 20 handle move on that. And they're sustaining this upside. It's not one of those news pops where we can see that they're fading this dip just yet. So we're going to see how that shapes up off the open. But there's a few things to talk about here. We had earnings this morning on names such as McDonald's, ExxonMobil, Pfizer, and a few more. Caterpillar and GM. So we have Snap after the bell, which is a tech name, but the majority of these, right, Cat, ExxonMobil, McDonald's, and Pfizer are down. They're gapping down pretty aggressively. GM is gapping up a little the last I checked. And these earnings, right, they're pretty large names, they're pretty tame names, lower beta names that are pretty much holding some of this downside here pre-market, which is not affecting that much the S&P. That employment number that came out this morning affected it a little more. Naturally, we do have Snap after the bell. It's set. Naturally, Snap is one of those names that gives us an indication of what the advertising revenue looks like, what the advertising sector looks like in the tech side of things, online advertising. So user growth as well and consumer spending, all those things, we'll get a good glimpse of what's going on there, which can lead into Meta and Google as well. So the main tech name that just reported, right, Microsoft, but we also have Meta that comes out tomorrow after the bell, along with Google, Amazon, and Apple that comes out Thursday after the bell, which is going to be a pretty eventful close. And according to FactSet, overall earnings are projected to decline for the season, with technology media companies among some of the top losers. So we'll see how that kicks into gear, right? There's also massive layoffs. They've already hit the industry as consumer spending slowdown and aggressive Fed weakens growth-oriented sectors of the economy. So we'll see how aggressive the Fed is tomorrow. So in the last 90 days, Wall Street analysts have been overwhelmingly lowered their earnings estimates ahead of this week's results. 42, 46, and 33 downward revisions for Meta, Meta, Google, and Apple respectively. So that's going to be pretty interesting to see how that shapes up. Apple is, let me just check right now, because I think it was gapping lower. Now it's gapping a little higher after that S&P news. So that's something that we do have to consider as well. So we're going to watch Apple as one of those leaders, right? IWM pulled off of that 189 yesterday, but it's also holding up pretty well here. So we're going to see if that really drops things and takes that turn to the downside. There's also, we should talk about the world economic outlook. Concerns about a recession continue to worry the markets. Fresh optimism was seen in the last forecast from the IMF. Resilient demand and spending in the US and Europe, strong labor markets, China's reopening and easing of the energy crisis saw the fund upgrade its global economic growth outlook after 3 cuts in the previous year. So global gross domestic product will likely expand by 2.9% in 2023 and 0.2 percentage points higher than the estimate in October. And there's also a narrow path, quote unquote, where the US can avoid a recession. So soft landing, quote unquote, is a very small likelihood. Even the IMF agrees with that. So the outlook is not worsened this time around, which in itself is good news, but not good enough, says the IMF. So that's something that we do have to consider as we still have these concerns. So overall, a lot of these news in today, we have the FOMC meeting begins. We're going to see tomorrow really the results and what's going on with the rate decision and forward guidance, dot plots, etc. We also had the employment cost index 8:30 this morning that already came out. We have also Chicago PMI 9:45 and 10 a.m. We have consumer confidence, which is going to be, they're going to be like spikes of events, spikes of news, spikes of movement. So there's going to be a slight little jolt in the market based on those. So I'd keep an eye on 9:45 and 10. I'm also expecting, excuse me, a slower market today, slower trading today as we get close to the Fed, closer and closer to the Fed we get, the slower the expected moves are. Now, in the S&P, yesterday we highlighted it, 40, 30, right? 75 was the top. That was a great area. We caught that piece on in our Discord, so go check that out, community.tradeproacademy.com or Tradepro Academy if you want to get into the private Discord. But yesterday, we mapped out 40-30 as a huge, huge, huge level for us to hold out. Now, right into the close, we popped off that 40-30, minus like a few ticks, I would say, and rallied pretty well, about 10, 13 points into the overnight session highs until just now, right? Those were the highs from the overnight session. And we got this larger drop throughout the market that brought us down to about 4007, the 07s, which rebounded pretty aggressively. We're up now about 40 points from that 07 region, and we're above the 30. We're also above the 40. Those are the two main areas that I'm going to watch for the bulls today versus the bears. Those are going to be two pivotal points where the bears would naturally try to push below those two areas. But as long as the bulls can hold, if they can hold above, I think that we can push a little higher. There's a distribution at the 47 region. Above the 47 region, we start moving into the 55, 65, 77, 75 region. So we want to see, can the 40 hold? Can the 30 hold off this open? And that's going to really propel more of the bull side. A dip and rip would be the best scenario for the bulls. If we start just dropping super aggressive, you know what to do. Just take a step back. But again, the day before the Fed, I don't really, right now, it's a little harder to see than yesterday. I want to see how this kind of shapes up in the first 5-10 minutes off the open, leading to probably slower movement into especially the afternoon of the session. So it's going to be very, very patient of a day, naturally, as most days are, but this one extra patient as we get ready for some of those news events and see where this market really wants to head after what we saw this morning. So with that being said, obviously, you're welcome to check us out at TradeProAcademy.com. We'll see you there. We have the free membership of Sides, and also we got a lot of new things coming out. So thank you guys. Enjoy the day. Happy trading. Stay diligent, manage risk, and I'll see you guys tomorrow.